If you think you have to put 20% down to buy a house, let's talk. There's lots of other options. Stay tuned and we'll go over them all. So, conventional financing.
Yes.
How many times have you heard, well, I don't have 20% to put down yet. I can't buy a house.
You know, if that was a daily game, I would probably hear that before 9 o'clock every morning.
And it's a lot of times, I feel like it's first-time homebuyers whose parents or grandparents bought a house 30, 40 years ago, paid off, they haven't done any financing since or anything like that, and it's just, they're giving them their knowledge. It's not that it's wrong, it's just not up to date.
Well, it's just like at one point in time you had to wash clothes with a little washboard too. Things have changed.
Oh my God, it was like your iceberg. That was great.
It's true.
All right, so let's talk about down payments. Conventional financing is not government backed, right?
No.
I know we did a while back, we did a government loan video. Conventional is Fannie, Freddie. There are what we call qualified mortgages. Those go to Fannie and Freddie.
Yes.
There are non-qualified mortgages, which are technically a conventional loan, but they're not going to Fannie Freddie. Those are what you call portfolio loans. They go to a bank that's offering it and they hold it, like your investor loans, things like that.
Yes.
So let's talk about Fannie, Freddie, and what we can do. 20% is definitely not the norm. I don't see many people do that.
Who is this Fannie and Freddie couple?
So those are the entities that provide us our guidelines and help us know how to qualify a borrower. So in other words, when I go to you and say, well, max debt ratio, this and that. So they give us the starting platform.
So is this someone's grandma and grandpa?
It is. No. Yes, they're little tiny elves sitting somewhere in a closet just throwing out all of these. They're not government entities, but there's been a lot of things in the news lately that they're going back and forth.
At one point in time they weren't they?
They were.
Yeah, and then they got privatized.
Right.
So, but no, it's no one's grandparents sitting on their front porch rocking back and forth going, I think this week we'll throw this one out there.
So Fannie and Freddie purchase mortgage-backed securities, hold them, sell them, helping to stabilize the market. A lot of times people will, let's say you bought a house today.
Yeah.
We financed it, right? We're servicing it.
Yeah.
And then in 30 days you get another letter that says Fannie Mae has bought your loan. Nothing is going to be changing with your servicing.
Right.
So they have actually purchased the loan.
Yes.
They're holding it. They bought those securities, or the mortgage-backed securities, what it bundled up. First Home becomes the subservicer, meaning we are taking on the role of just collecting your payments, holding escrow, paying taxes and insurance, and we're getting a percentage.
Yes.
Okay.
And I'm going to qualify one thing you said there. So when you get the letter saying we bought your loan, call your lender first.
Oh my God, it's a weekly call or email I get.
Because
that's fine.
Well, there's so many scams going around.
A lot.
That people end up making their payment over here to this offshore bank account.
And it is confusing.
Oh, it
is confusing.
Yes.
Our last clients, he was confused because he got everything at once.
Yeah.
You know, we'll basically send out a welcome letter. Then we send out a goodbye letter.
Yeah.
And then you may see another name because we have a servicing entity.
Yeah.
Then you may get something from Fannie or Freddie.
Yes.
So I mean, it's a lot of things to take in, and if you aren't familiar with the process, especially first-time home buyers, you know, it's confusing, and you don't know which one to pay or where to pay or when to pay.
It's confusing when it's your fifth house.
Yeah.
Because you're moving, you're de-stressed, well, you're stressed, you're de-stressing, you're trying to work, you're trying to find your coffee pot because it got labeled in a box with toys. Yeah. Moving is stressful anyway. And so when you get this letter in the mail saying, hey, we bought your loan, you're like, well, who are you?
Right.
I didn't sign up for you. So yes, always call and verify. Now that we went through that left turn.
Yeah, just, you know, a little side.
Yeah.
So the loans available that we can send to them, they basically dictate down payments.
Yes.
5%, 10%, 15, 20. Anytime you put less than 20% down, you have to have mortgage insurance.
Yes.
Now, unlike the government loans we talked about before, mortgage insurance is provided by private insurers. There's companies that actually classify you based on credit score, amount of money you're putting down, one borrower, two borrowers, debt ratio, everything comes into a factor in what your mortgage insurance cost is. You can shop.
Okay.
We usually pull, 5 of them at a time.
Yeah.
And it'll say this person, and they all offer different rates based on different categories. So it's good to shop them. You know, if you're putting 5% down, company A may, I'm not going to say any company. Company A may offer a better rate than company C, B, or C.
Yeah.
But if you put 10% down, it may be B.
Yeah.
It's a game.
It is.
It's like shopping.
But on conventional is different than FHA, which go to our last video, you'll understand all the difference with
It's
FHA.
fixed.
Conventional goes away when you get down to 20% equity, correct?
Correct.
So.
And it's predetermined based on how much money you put down,
Yes.
and then how many years, what you put down, and a term is determined. In other words, 5% down, generally it's falling off in like 8 years, 8.5 years. And it's predetermined based on, I don't know what they do, 4% appreciation. It doesn't take into any consideration other factors.
So let's say we have another COVID
Right?
and we go up 20% a year.
Yeah.
Can it disappear then?
You can petition your bank. You basically call the servicer and say, hey, I would like to have mortgage insurance removed.
Yeah.
It's not required for any amount of time. They would actually say yes or no. It's up to them.
Right.
Most of the time they're going to go through the process. They order an appraisal of the property to verify you have actually increased that value. Because people may put a ton of money down too. Let's say you put 5% down when you buy it, you go sell your house 6 months later and then put $100,000 towards it.
Right.
You've reduced the principal, therefore giving you more equity. And you don't need mortgage insurance anymore.
Right. Or, and they can always call me. I can run free market analysis for them.
Right. And that gives you a starting point. The banks
Yeah.
are still going to want an appraisal.
Oh, absolutely.
But why waste your time?
Yeah.
And the fee and everything else, right?
Yeah. When you have your standard realtor for life that will do it for you anytime and can say, oh, here you go.
Free services included in the future.
It is. You basically get me for life. I'm
Does that include washing cars? And
No. In fact, I don't even wash my own car. I bought a Lexus and I take it there and they wash it for me every day.
Really?
So if you buy a car from
Stop.
Sheehy, yes, you take it in there anytime. You pull it in there and they take your keys, they go hand wash it, they bring it back to you 15 minutes.
Really?
Oh yeah. Yeah.
So if you're looking to sponsor a podcast, you can message me or hit me up. We're happy to
Sheehy
help.
Lexus. Mhm. Yeah,
I had no idea.
Oh, it's awesome. In fact, I'll be taking mine over there Friday morning because that's when it fits into my schedule.
Okay, conventional loans. So we talked about different down payments, we talked about mortgage insurance, but we didn't talk about what's available to a first-time home buyer. Did you
Ooh.
know they
Yeah.
have different requirements? Like what's
No.
the minimum down payment for a first-time home buyer if they go conventional?
According to my grandma, it's you have to put
20%.
20%. Yeah.
So you can actually get away if you are a first-time home buyer putting 3% down.
That's less than FHA.
It is. That's why we always want to compare loans for a client.
Yeah.
Show them conventional at 3% because depending on credit score, your rate may be much higher and mortgage insurance higher than FHA. So we'll show a conventional scenario, we'll show an FHA scenario.
Dang.
Yeah. Only has to be, you can have two people, let's say a couple gets married.
Yeah.
One person had a house, so it's not a first-time home buyer, and the other one is, you still qualify for the 3% down.
So I know in Maryland, you can own a house in every other state, every other country, and you're a first-time buyer here on the transfer and recordation taxes.
Only on that fee, right?
So, but on the conventional loan, if you own a house in Wisconsin, you're not a first-time buyer here.
Correct.
Gotcha.
Yep.
So,
Because remember, it's
Yeah.
Fannie, Freddie that
Eight.
set the rules, and they're
aunt and uncle.
all encompassing, right?
Yeah.
So they know, okay, we have a house there, you're not a first-time home buyer to me.
It almost sounds like, they remind me of, what was it, like Daddy Warbucks or someone? Yeah. sitting up there on top of the hill going, we will be doing it this way. Or what was it, Thurston Howell and his wife
Yeah.
in Gilligan's Island?
Yeah.
Yeah, they're all rich and set the rules. That's kind
Oh my
of
God,
the
what's her
impression.
name? Thurston?
Lovey.
Was it Lovey? Is that
Well, that's what he called her.
That's what
Lovey.
he called her.
Yeah. I don't know her name.
Oh my God. I
Yeah.
can see that movie.
Yeah.
Yeah, that's aging us. My kids would look at me and go, what the hell are you talking about?
Yeah. So, sorry guys, we go on tangents.
Just a little aside.
Yeah.
Okay, so financing, you do not have to put 20% down. So let's talk about the benefit though, if you do.
Okay.
If you put 20% down, you don't have to have mortgage insurance, which is a great thing. Are rates lower? I'm asking you. I'm gonna give you a little quiz. So if you put 5% down, let's say you put 15% down, and I put 20% down.
I would
We have the
think,
same credit score we have. Everything's the same.
So-
Am I gonna have a better rate?
I would say yes. And here's where my little pea brain goes.
Okay.
Well, I don't know. Let me think this through. Because ultimately,
You want to phone a friend?
can I phone you? Hey, Darren. Help a girl out. All right. So at the end of the day, it comes down to the risk to the lender.
Okay.
I'm thinking this
No,
through.
you're on the track. You're good.
Right.
Good. You're warm.
What's the risk to the lender and what's the profitability to the lender? Because you're not involunteer.
No.
This
But
is
the
not
risk is the biggest thing. So what
Okay.
alleviates risk for a lender?
where
This is like
you
a game show.
so if you put 20% down, God forbid this goes to foreclosure. All right, we're going to talk this one through,
The
guys.
bank's
'cause
risk
is lower over here. However,
you're getting there. Warmer.
correct me if I'm wrong over here. My impression of mortgage insurance has been that if the loan goes to foreclosure, this insurance company is covering your loss, where over here with the 20% down, no MI, there is no one covering your loss but you.
That's your final answer.
That's my final answer.
I wish I could get to the soundboard because I've got a little button for ding, 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 ding. That is correct. That is correct. So
Boy!
you actually have a lower rate, and I've done this for
Okay.
clients where 20% down, they've got a rate.
Yeah.
15% down, and we get rid of mortgage insurance, which we can talk about in a minute.
Yeah.
Your rate's lower. Because the risk.
Because
The bank goes,
Yeah.
I don't have as much risk. Someone's going to pay me if they walk away.
yes.
I have an insurance policy to cover that loss. I'm going to give that person a lower rate.
Yeah.
It's not huge. I mean, we're not talking
We're not talking
0.5% in
yeah.
interest rate,
It
but
may be an eighth of a point.
could be.
Which, again, monthly, all right, maybe that's $100, which now that covers your cell phone bill. Not much.
Not my cell phone bill. 3 kids.
Well, I'm just talking about my portion,
Yeah.
my one little phone portion.
Right.
Yeah, because we're not even gonna go there. I got nothing happy to
I'm
say
gonna
about
do.
that one.
I got to do another aside.
Okay.
Because I bought a cell phone over
Yeah.
Christmas for my oldest son. And sorry, humor me on this. Went in, bought the wrong phone. I went in to exchange it. We started
Yeah.
going down all the plans, and I had no idea. Like under a plan, I've got a master plan. All the phones. Each one is I pay per line.
Yeah,
A minimal fee, like 35, 40
Yeah.
bucks. They're all different. And I said, why are the fees different for the phones? He goes, well, that's based on what plan you have. I said, they're all under the same plan.
yeah,
He goes, no, each one has different, in other words, this one's at $35, this one's at $40. The $40 has priority call. I'm like, what's that? He goes, it means if you're in a city and it's really
Yeah.
crowded, a lot of people using phones, you have priority, meaning your call will get answered and you'll receive calls quicker than the person who's only paying $35.
well, all right,
Guess whose is at $35?
your son's?
Mine.
Oh.
Which explains why I drop calls a lot of times in Prince Frederick
Hey,
or Annapolis.
And you're like, homie, I pay the bill. I get priority.
Had no idea.
Well, I just got the 17 when it came out in October? Because my phone was on life support. It was 3 years old. I was charging it 3 times a day. Yeah, most of the time I just left it plugged in.
Yeah.
So they go, okay, well, sorry, Verizon, I'm totally throwing you under the bus. I got no shame in my game now. They're like, we'll give you an $800 credit that's paid off over 3 years, but then you have to upgrade to this $70 a month plan for international calling. So now I need to take a trip to Italy just so I can justify the $70 a month.
So much like mortgages,
Yeah.
the cell phones, not a lot of people understand
No.
the numbers in the bill.
No.
Did you like, I just tied that together?
Yeah, I do.
Yeah. So a
There's
lot of
a nice
people
single
don't
box.
understand mortgage insurance. I mean, they don't understand what it is. They don't understand how it costs. They don't understand how do I get rid of it. So let's say you put 15% down.
Mm-hmm.
We can do what's called borrower paid or lender paid, meaning we do a one-time payment,
Okay.
which is super cheap, putting like 15% down. You pay it one time, you get rid of mortgage insurance for the life of the loan.
Okay.
Never pay it in your payment. You pay ahead. What that means is you don't have mortgage insurance. You're putting less than 20% down, so your cash out of pocket is less. Your rate's lower. It's a win-win for everybody, right?
Correct.
Should be.
And the chance of the rate right now dropping significantly in 6 months to
Correct.
where you can refi it
And lose money.
and lose money is
Slim to
here.
none.
So, dang, where was this conversation when I was buying? My
See? I saved it for
6
today.
and 7/8. Yeah,
I saved it for today.
that was like highway robbery, but it is. But it gave me the house and the lifestyle I want.
Well, the problem is back when you bought yours, we're like, oh, rates are going to be 1% lower in 9 to 10 months.
Yes.
And that's what everybody was forecasting.
Oh,
And
I was like,
We're not quite there yet.
I was like,
We're
I
not
only
there.
have to make 6 payments. No, I've made 3 years of payments.
Right.
So, yeah, but a whole nother topic for another time. So, all right, the only reason why I understand mortgage insurance.
Mhm.
Let's go back to 2010. We're going back 15 years. That's where I understood why the banks were not eager to do a short sale where they'd rather go to foreclosure because they were eating the loss over here under the short sale, where if it went to foreclosure, the mortgage insurance was kicking in and they were losing less money.
I assume.
That's
That's above my pay grade.
that's the way someone at a particular bank explained it to me.
Yeah, I'm not sure how a short sale works because you're writing it off.
Well, the short sale,
They're
you
not-
have to get all the investors in the mortgage to
Right.
meet and approve it.
But they're doing essentially settled for less than owed.
Yeah,
You know, so they're selling it and saying, okay, we'll take that amount.
yeah.
We'll just make that disappear. And it's
So-
equity. It's not,
You
it
know,
might be money
yeah.
they're owed. I don't know.
I think this would be a good topic for another time.
Yeah, that's a
Because we
lot.
can get deep, deep, deep into this. And where we are seeing people right now that pushed their budget a couple of years ago
Right.
and may have to sell within another year or two where they may end up upside down.
Yeah.
Let's have that uncomfortable conversation.
Yeah, okay, we'll mark that one down for later. Check. Okay, so conventional finance, let's talk about an offer. We talked about VA and offers and things like that. You're a listing agent, conventional financing offer comes in, let's just say 20% down, not asking for
Yeah.
closing help. What's the benefits as a listing agent?
None.
No?
No.
Okay.
To me, the strongest benefit to an offer is the contingencies they're putting in there.
Right.
What are you asking for? What do you want my seller to do? Are you asking my seller to use a toothbrush to clean all the grout in the house? But it also, this is where you come into play. Which lender are you using?
Right.
Are you using one that I can call on Sunday afternoon at 4 o'clock between football games and get an answer about the quality of that buyer? And know that they're a strong buyer that's likely to get to settlement, that they haven't shown any issues that create concerns. That's what I care about.
Right.
I don't care about the type of loan. I don't care if grandma's giving them $50,000. I don't care if they're buying it as an individual or as a couple. I care about the communication with the other realtor.
Right.
Can we talk, or is it going to be the alpha situation?
And the lender.
Doesn't work for me.
Communication with the lender.
And I care about the communication with the lender.
So does it matter, like if you have two offers come in identical, different lenders, is that a factor?
Yes. Huge factor. So again, most of the time, I'm dealing with an offer at night. I'm not dealing with it during banking hours. I'm not dealing, it could be Sunday afternoon, it could be
Because
7
you're
o'clock
meeting
at
with your
night.
sellers that work,
Yes.
and you're meeting them after hours to
Yes.
go over to. Yeah.
So once I discuss it with my seller and see if it's something they're willing to consider, then I call the lender. And if I get the voicemail of, "Hi, it's after hours. I will call you back tomorrow between 9 a.m. I'll call you back during business hours at 9 a.m. to 5 p.m. except for holidays." I'm like, "Oh crap." And if I call you and you answer your phone at 7:30,
Right.
you may be sitting in the hot tub, but you're going to take my call.
There's a mental picture we did. All right, let's cut that out.
All right, what about if you're about to go down the ski slip?
All right, there you go. We'll work it out. Yeah.
You take my call and you answer it. And if I say, "I'm calling about Billy Bob and Sarah Jane," and you're like, "Oh yeah, I went," you know them. You're like, not like, "Oh, let me go back through my file." Because you just issued the pre-approval, you
Right.
know they're qualified, and I don't ask for their credit score, I don't ask for DTI, debt to income ratio, again, we'll get into that later, but just hear me out. I don't get into all of that. I ask you one simple question. What's the likelihood this buyer is going to get to settlement on the offer that the seller presented? The buyer presented to me.
Right.
That's it, that's all I care about. And if you tell me they're incredibly strong, I have no concerns, great.
Gospel.
That one goes to the top over the one that I can't reach the lender. And most of the time, my sellers don't want to wait till tomorrow morning for me to verify.
Right.
Especially if they're identical, they're signing this one tonight. And this one is getting the, "Hey, I really appreciate your offer. Unfortunately, I wasn't able to reach a lender to verify. My seller opted to go with another offer."
So I have had, conventional loan,
Yeah.
appraisal wise, usually is an as is, right? Contracts as is.
No.
I've had government loan, technically, if you write it that way, it can be.
Yeah,
I've had government loans appraisals come back as is.
yeah,
The only difference is,
Yeah.
I don't need to see your reports. I don't need to see septic, all that stuff.
yeah.
Unless there's issues, and you want it on the closing disclosure, which is a whole nother
That's a
conversation.
whole nother.
We need to have title people here and everything else.
But here's the difference though. If the property's on well and septic, which most of southern Maryland is, and southern Anne Arundel,
Right.
you're gonna be on well and septic. And again, if you go into Baltimore County or over Frederick, all that. A lot of the states on well and septic. I want a passing report for my client.
Yep.
If I'm on the listing side, that agent had better put in the inspection addendum. If they don't, they waive the right to do the inspection.
Yeah. So it doesn't matter what you do for financing.
No, but I know if it's a VA loan, I've seen this so many times with agents where they're newer, they're learning, and, I'm not gonna hold that against them, but they'll submit the offer where they're not putting in a well and septic addendum for the inspection, but I know that you're not getting a VA loan or FHA loan without that passing.
Right.
If it's conventional, I'm like, all right, you're taking it as is on that, which is the dumbest thing on the face of the planet you could do.
For your clients.
Yeah, as a client, yes.
Yeah, absolutely.
As a buyer, you want to inspect that septic tank and you want to make sure you have potable water.
Yep.
If you can't flush your toilets and have a cold glass of water,
Well, I just had one where the well and septic both failed.
yeah. See it all the time.
So you have to know.
Yep. You got to know what you're doing.
You don't want to find out later when you already own the
Yeah.
house and go, God, that's going to cost me $30,000.
Yeah. But even on my conventional deals, I'm still going to send the lender the passing well, septic, and the wood-eating critter inspection. So that's your termite, carpenter ants, carpenter bees. I just want it in the file. It's habit.
Right.
And if those 3 things don't pass on a deal, I don't want my buyer going forward. But if I'm the listing agent and you forget to include it, game on.
Yeah.
You waive that right.
So,
Yeah.
conventional financing. We didn't talk about non-QM, all that. I think that's a whole nother topic. We
Yeah.
can talk about investor deals.
We can get into self-employed nightmare.
So that would be a great
Okay.
piece to add on to self-employed,
Yeah,
when we talk about self-employed borrowers.
yeah.
Which you've been through, so
Yeah, it's,
Yeah.
again, that might be a good one for when we do Cinco de Mayo, when we're having margaritas to handle the flashback of that, and all the calls.
it went
to-
very smoothly. I don't know what you're talking about.
I don't know either. Just a little minor twitch.
So I think that gives you a basic idea of conventional financing, right? Comparing it to government. If you have any questions, let us know.
Yeah.
And we talked about mortgage insurance scenarios. Again, keep in mind, you should be getting side-by-side comparisons or multiple options for any scenario. Whether
Yes.
you're doing government, whether you're doing conventional. If it's not an option or you don't qualify for it, that's one thing.
Right.
But you at least need to see it just to say, okay, I don't want to do that. That's too high. The payment's too high. Whatever it may be.
I mean, this isn't like going to buy shoes. You go in, you try on one pair, they're comfortable, you're like, I like them, I'm taking them home. Try on all the different options. It's easy. For you, it's a click of a button.
It's like ordering on Amazon. You can order 3 dresses.
I know, and then
Only one fit.
I return the other 2.
Or you just keep the other, all 3. And
Yeah, I still have to buy a long dress for an event coming up. And I'm debating, do I go into David's and try on their options? Do I go to Macy's and try on their options? Or do I go to Amazon and just have them deliver and then I send back what I don't want?
I like that one. They used to have, I looked the other day, my wife was trying to buy a dress. They used to have the one where you could, try on and you try it and buy it type of thing, where they send it to you. You try it, you don't have to pay for it until you keep it. Wasn't that a thing?
Yeah,
Or am I imagining things?
no, there was a company doing that, but I never got into that one.
I didn't either. I just remembered it.
I'm not a fan of shopping online.
No?
No, I mean, not for clothes. I need to try it on. I have a weird body.
I don't go, we haven't been to a mall. Wow, this is really going sideways.
Eh.
I haven't been to a mall in probably 5 years.
Yeah, well, I was up there about a couple of weeks ago.
Desolate?
It was.
Annapolis.
Yeah, but you had everybody going, here, you want to try a sample? Want to try a sample?
Food?
No, it was a little hand cream stuff. And I'm like, don't make eye contact. I'm on the phone, I'm like,
You walk down the middle of the aisle, I don't have time, but then you walk down the middle and you got all the people selling cell phones and jewelry and, cases and AirPods and screen
I'm
protectors.
like, this is like going through a gauntlet. I feel like remember that show where you were on the inflatables and you're like falling off in the water?
Yeah.
I feel like that's pretty much.
And they're out there selling, like they're coming over to you, you want something, and you walk by,
And you don't make eye
hard
contact.
sells.
Yeah, it's like, don't make eye
They
contact.
pull you into that booth so they can sell it.
I'm like, I'm gonna get kidnapped here in a second. I'm gonna be stuck in the back of a white van, no windows, just to try the hand cream.
All right, well, if you want to know more about conventional financing or shopping at your local mall, no, but seriously, conventional loans, have any questions, let us know.
Yeah.
I'm happy to put scenarios together if you want to see differences, if you're in that time of looking, or getting pre-qualified. Let me know.
And I'm happy to take you house hunting.
There you go. The fun stuff. No one wants to talk to me. Everybody wants to go look at houses.
Yeah.
Stay tuned. We got more coming up. You guys have a great week. We'll talk to you soon.